Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com, founded it 21 years ago in 2003 to provide advanced technical analysis, market commentary, trade ideas, and our passion, mechanical trading systems such as our 21 SPY and ES mean reversion systems with about 90% winning trades. They've been fairly quiet this year, mean reversion. What's really killed it though has been our KISS systems. They are trend following, they keep you in the market. For example, here's the KISS systems. It's directly in the systems area, KISS STS tables. And you can see today, all these in blue had new smart trailing stops generated. For example, the S&P smart trailing stop moved up from 53.61 to 55.19. Nice to see that. It's really tight stop. You can see all these. You can see the amazing gains here on the systems. These aren't back tested. These are live. And if you're a subscriber to Breakpoint Trades, you could get all these alerts and follow these yourself. Okay? Click the enroll button. Our best subscription is our 6-month subscription right here. That's what almost 99% of our subscribers use. It gets you about a 40%, 50% savings over the monthly based on time. And again, please consider subscribing if you're just a YouTube follower. I think you'll be amazed at the technical analysis here. And let's go ahead and get back to this video at hand. So this is the back-end recorder for our standard website subscription. And I'm going to go and get this recording started right now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, July 10th newsletter. Tonight's newsletter, as you can see, divided into 5 major sections. Again, the same format as I always keep. We first have our opening statement. We discuss the major, we then look at some admin things, KISS systems. We'll then look at the general market indexes, the Dow, S&P, NASDAQ, Russell 2000. We do a top-down approach. We look at some various market indicators like the VIX, breadth indicators. We'll look at the bond market, the 10-year treasury yield. We'll look at a few major sectors. We'll look at the US dollar, Bitcoin, commodities, precious metals, GDX, and some individual mining stocks. And we'll follow up with recent trade setups. Okay. All right, guys, as you know, like a broken record, the market continues this momentum uptrend. You know, the market's in idiot mode. It is what it is, but it's fine with us. We'll just continue to follow the trend. We've been favoring this move as a wave 3, and wave 3s are the strongest waves, as you know, and it just continues to power higher. Today, the major indexes all rallied about 1%. That's the S&P, NASDAQ, small caps, and the Dow Jones, all up about 1%. Okay, like I said, the market's in this strong wave 3 pattern, and to me, it appears to be having a blow-off move, right? Now,
Toyota, which has been in the background
said,
lobbying
the big
on this,
news items
and
here,
you've got
Thursday
analysts
and
saying
Friday,
that this could be the next move for some of these other states in India to also start.
That comes out on Thursday at 9:30 Eastern, and that's for the CPI, Consumer Price Index. And on Friday, we have the PPI, which is the Producer Price Index for the producers. So that has the potential to move the market. I'm hearing rumblings of maybe a softer CPI, and obviously that would be positive news. But what I'm thinking is, since we've had such a big run, perhaps we'll see maybe a quick spike, and then we could see a reversal on the market, kind of like a sell the news event. Again, we're in this wave 3, so sometime soon we're looking for a wave 4 pullback. Not a major high, guys, just some sort of wave 4, but we just continue to uptrend. Again, guys, that's the beauty of our KISS systems. Instead of trying to pick tops and sell early and then miss a trend, just follow the KISS systems. They'll keep you in that trend as long as it continues. And that's what's awesome about it. Again, this is one crazy market. Historically, we've never seen such concentrations. So for example, 10 stocks in the NASDAQ make up 50% of its move by a weighting basis. Think about that. Just 10 stocks. For the S&P 500, 10 of those 500 stocks represent 38% of the move. You know, it's that crazy concentration of those large cap tech stocks. We've never seen concentrations like this before. Again, things like this can go on for long periods of time, but eventually there will be a reprieve, right? You know, NVIDIA has a larger market cap than the entire Russell 2000, right? Barely 50% of the stocks in the S&P 500 are now above their 50-day moving average, while the S&P is at crazy new all-time highs. All right. Again, we'll continue to follow the trend and the insanity for as long as it lasts. That's what the KISS systems are great for. Here's a funny thing. Someone texted me this morning. 50 cents changed his name to 85 cents to adjust for inflation. Anyway, little fun, little levity there. Let's go ahead and move on. So item number 2, this is directly from the KISS systems, and with this big move today, clearly we got a lot of new smart trailing stops generated. Now this isn't the high performance which is coming. This is just the standard daily, which again have been live on the website for over a year and a half. All right, look at all these nice trades here. The S&P 500 new smart trailing stop moved up from 53.61 to 55.19. That is extremely tight stop. It's raised its stop 6 times since it went back. The system went back long on May 3rd. Trades up about 9.5%. Let's get the Apple at a new smart trailing stop today. That trades up about 24%. UPRO trades up about 27.8%. The previous trade made 54%. These are all live trades, guys. These aren't back tested. These past trades aren't back tested either. They've all been live on the website. All right, and this is just the short BPT basket. We got all these baskets here. We got all the S&P 500 stocks, all the NASDAQ stocks, most of the major ETFs, all the Dow stocks. Got a bunch of others in the miscellaneous. Remember, you can set favorites. You can get automatic email notifications whenever your favorites have a new smart trailing stop or a new entry. And so you can literally follow these like a pure mechanical system. Also, you could use them like half systems. What I mean by that, let's say you're already long a stock. You didn't buy it based on the KISS systems, but you already been long it and you want an idea for where to place a stop. Well, you can use these. You can use the stop technology here. Simply type in your symbol in the search box. You know, as long as it's a large cap stock, most likely we'll have it. We have about 750 stocks and ETFs that we follow with the KISS system. Okay. Next, image number 3, here's the S&P 500. As I just showed you, like I said, the smart trailing stop moved up from 53.61 to 55.19. That's a heck of a jump. Pretty awesome to see that. It's really tight. You know, any fourth wave pullback, that'll likely be hit, but profits are clearly protected. You can see how the system was long last year into, this was early April, and then it got back in early May, and it's been riding the uptrend since. Here's UPRO. That's the leveraged ETF. That's the one I own. You can see essentially the same trade. Being a leveraged ETF, you can see where it went back long here. Smart trailing stops at 79. This trade's up almost 28%. 28% from this May 3rd entry. That's pretty awesome. You know, that's a great move for one of the indexes for the entire year. And you'd have captured that on the KISS system in just a couple months. Next, let's move back to the general market. So item number 5 shows the index sector table, what transpired today and this week. You can see the 1% gains across the board for the major indexes today. So major indexes are obviously up nicely for the week now. Most of the gains this week came today. And as far as the market sectors, we followed 21 sectors. All 21 were up, so it was a broad-based rally. Okay, you can see how everything looks for the week. Pretty broad-based as well. Only 4 sectors were down, with transport's the weakest, as well as energy area. As far as the strongest sectors, again, you name it, it's semiconductors and technology. Remember, that is what has led this market. That's what everything is so concentrated in. You know, that's why you have 10 stocks in a NASDAQ that make up 50% of its gains, right? And currency-wise, US dollar down a tad today, still up for the week. Bitcoin down today, but up for the week. Commodities, were essentially flat today. They're still down for the week, down 2%. Again, weakness in crude oil, natural gas, copper. Uranium had a big day, up 4.5% essentially. Okay. Agriculture down, other commodities. Corn is quite oversold. I'm going to show you a setup there. Precious metals were up slightly, gold and silver, but what are leading is the stocks. GDX up 2.6%. And when the stocks lead, they tend to lead, so that's still healthy right now. And as far as the bond market, you can see pullback in the 10-year, 30-year Treasury yield. I haven't talked about the yield curve in a while. That's at 0.93. Remember, that's been inverted for the second longest in history. The longest time historically was back in the 1920s, right before the Great Depression. Again, I'm not saying we're going to have something like that, but this is the second longest in history that it's been inverted. Now, typically when this goes back from uninverted, so this goes back over 1, typically that's when your recessions are confirmed. So I firmly believe we are going to get a recession, guys. Not going to be an ultimate soft landing. A recession will be coming. But right now, it doesn't matter for the market, and the market is trending. It's just something to consider for the future. Next. Item number 6 shows the economic news calendar. Like I said, on Thursday, the big boy is the CPI. Okay, we'll see if that comes in a little weaker than expected. Maybe that'll cause a quick spike up on the market, and then if it does, I would watch for a quick reversal, because sometimes you can get a head fake. Quick spike up to trap some late bulls, and then a reversal to trap them. Just something to be aware of. We also have initial jobless claims in the morning. We'll see how that looks. And of course, on Friday, we have the PPI. That's the Producer Price Index. Next, jump to the index charts. Chart number 7. Here's the weekly snapshot of the 5 major indexes. Again, look at these nice gains. The S&P and the NASDAQ, as you know, they've been leading. They closed above their upper Bollinger Bands last week, and they're up above them again this week. All right. It's usually rare to see it above the upper Bollinger Bands 2 weeks in a row like that, 2 candles in a row. But hey, we're in this blow-off wave 3 right now. Again, things that continue to lag are the Dow and the Russell. You can see the Russell's got a coil here in the weekly. I think eventually this year we're going to see some sector rotation back into the Russell, and that's going to play some catch-up. Okay. Next, chart number 8, here's the Dow Jones. I don't show the Dow often, it's 30 stocks, but you can see finally it's taken out this coil trend line that I showed on the weekend. Again, perhaps this will play some catch-up to the S&P and NASDAQ that have led so strongly. Chart number 9, here's the daily S&P KISS system. Now, this isn't the one from the KISS tables. This is the custom version that I have. It actually has better stats. This one did not have a new smart trailing stop. It's still at 54.26. Remember, the one in the KISS tables is all the way at 55. I can't remember the number now. 55.20. So it's quite a bit higher. It's 100 points higher, essentially. Again, use whichever one fits your style. But again, these KISS systems are just a thing of beauty. Just riding the uptrends. And that's, again, guys, I know it's corny to say, but like I said, if you're worried about the market being in idiot mode in this, it's unprecedented territory, crazy concentrations that we've never seen before, and you're a little bit worried about that, that's the nice thing about the KISS systems. Instead of trying to pick tops, and then you miss a move in the market. Let's say the market still wants to go up for another month or two, but you get out now, and then you feel like, you feel like crap because you missed that move. The KISS systems keep you in that trend for as long as possible, and they keep raising those stops. So they always give you that exit plan. It's like life insurance for your portfolio. Chart number 10, here's the 4 time frames. Daily is at the upper left. We did DeMark 9 yesterday, but then we powered up again today. If we go up another couple of days, we could see a DeMark 13. Usually these DeMark 9, 13 combos are pretty good, at least for some sort of pullback. Otherwise, the ATR is supporting all the time frames you can see. Just continue to push higher. Chart 11, here's the clean daily view of the S&P. Like I said, 10 stocks in the S&P make up 37% of its gains on a weighted basis. Just insane. Again, this is just a simple way to view this. Nice clean channel. Perhaps if we gap up tomorrow, maybe this upper channel line could be a little resistance. Also, you can see this MACD, this divergence is now being lost, being negated. Next, chart 12, here's another clean view of the S&P. Remember, I've been stating we view this as a wave 3. I talked about that last week, talked about it on the weekend. No changes. We continue to be on this momentum up train in the wave 3. Chart 13, here's the half-day chart. Just shows you the same thing. You know, our favorite case is we're working on a wave 3 of 5. Once this ends, it won't be a major top. It'll simply be a wave 3 of 5. So then we'll be looking for a wave 4 pullback, but then another new rally to a new all-time high, probably go to 6,000. Chart 14, here's a 60-minute view. Again, you can see that last consolidation was simply an ABC. We rallied right off of it. Chart 15, here's another 60-minute view just showing this channel. Again, like I just showed you on the daily chart, this upper channel line could be a target here in the short term. Chart 16, another 60-minute chart. We do have a little MACD divergence on the 60-minute chart. Be aware of that. Again, that could be negated, but it is there. And we'll see, guys. Let's see how the market reacts tomorrow. If this were to like reverse here, maybe that'll start our wave 4 pullback. Chart 17, here's a 30-minute chart that Steve showed on last night. Again, you can see how this is a demand zone. We came out of that. We bounced off of it, right? That became support. Next, chart 18, here's the Triple Q's NASDAQ KISS system. Now, we do have a DeMark 9 on here today, okay? And the last time the DeMark 9 did lead to a little pullback, so we'll see if that does or not. Again, no new smart trailing stop here, though. Chart 19, here's the 4 time frames. Again, you can see the DeMark 9 on the daily. We have a DeMark 9 or 13 on the half day, so be aware of that. So 9-13 combo. Again, otherwise ATR is supporting all the time frames here. You can see how price is just riding that up. Chart 20, here's the Triple Q's daily. Again, up and away. In fact, this MACD divergence, remember there was a little MACD divergence there previously. It is now being negated. That's why divergence is never a sell signal. Again, the top 10 stocks by weighting make up 50% of the Triple Q's move, which is insane, the amount of concentration, guys. Also, guys, just a little education. The RSI here, just want to show you this. The RSI back here was the highest it had been in 5 years. Whenever you see that, it's never a major top. It's usually some sort of wave 3 action. It's actually bullish. So again, a lot of times you'll get a quick pullback, but usually that's something you want to buy. So for example, when this was the highest, RSI was the highest it had been in 5 years, yeah, you got about a 3-day pullback, but it ended up being a buying opportunity. That's indicative of strength, not topping action. Okay. Next, chart 21, half-day chart. Again, just up and away. You can see how far price is now getting expanded just away from this trend line. RSIs are getting sky high. Like I said, RSI here, 85. The 5 RSIs at almost 98%. Chart 22, here's the 60-minute chart. Again, we do have, just like on the S&P, we do have some MACD divergence. So unless we just blow away from here, we would need to blow away from here to negate this. Otherwise, again, with that CPI, PPI data, it is possible we could have a little top here with a divergence. We'll see how the market reacts to that. And chart 23, here's the 30-minute chart, just showing you how we rallied right out that demand zone yesterday. Made a new all-time high again. Next, again, what is running the markets, guys? These crazy historic, concentrations that we've never seen before. These big cap tech stocks. Apple, okay, continues to power. By the way, the KISS system's been long this for a while, catching that move. Charter 25, Microsoft, been running away. In fact, it has kind of a little bull flag look to it here now. Charter 26, here's Amazon, again, another one that's done well. KISS system has been long, all these guys, so you can just simply follow the KISS system. Charter 27, Google, can make it another new high again. So again, guys, market's really not going to have any meaningful pullback until these also pull back. So for now, these are all still very strong. Here's Meta. Here's NVIDIA. And we'll see if this goes to a new high or not. Honestly, you know, wouldn't be surprised to see that. We'll see what this does. Finally, here's IWM small caps. Again, they did bounce off this demand zone from a couple weeks ago. Just kind of slowly meandering. They continue to lag overall, but I do think eventually we're going to see some rotation into here, and I think this area will play some major catch-up to the other indexes, right? But for now, still stuck there. Charter 31, here's the 2-hour chart that I showed the other day, this coil pattern. You can see price is trying to slightly break it, so you could have bought this today with a tight stop, perhaps right there at that higher low in the coil. So we'll see if this can follow through or not. Next, let's move on to some market indicators. So here's the VIX and the VVIX. Again, nothing. Well, the one thing I will point out here, guys, the VIX was up fairly strongly today, right? So the VIX, for example, was up. Let me check the percentage. VIX was up 2.7% today, while the S&P was up 1%. So again, that's rare for the VIX and the S&P to be up on the same day. Clearly, some people are hedging ahead of the CPI, so I understand that. But you know, the VIX has been stuck in this demand zone, support zone. It's held that. But one thing I'm watching here is the Bollinger Bands are pinching on the VIX and the VVIX-VIX ratio. So that's indicative that a bigger move's coming, and maybe that's some sort of fourth wave pullback. All right. Next, Charter 33, here's the percentage of stocks in the S&P 500 that are above their 50-day moving average. Again, even with today's move, new all-time highs. You know, S&P is at 5,635. The 500 stocks in the S&P 500, they're only at 51.6% above their 50-day. Only 51.6% are above their 50-day moving average. Think about that, guys. I mean, under a normal market, this should be 85, 90%, right? That's crazy. You know, for example, back last year at the July highs, notice this was at 90%, which is what you'd expect. That was a new all-time high for the S&P at that time, and the percentage of stocks in the S&P 500 were at 90%. Right now, they're barely over 50%. So clearly, something's amiss there. And Charter 34, here's the percentage that are above their 20 EMA. Now, this is starting to pop a little bit, but still, I mean, it's, what is it? It's 58%. So hopefully that shows you guys. Again, those aren't direct sell signals, but they are things, maybe little early warning signs, canary in the coal mines, keep an eye on. But again, even when we get a pullback in the market, I'm not looking for a major top here. I'm just looking for some sort of wave 4 pullback that will ultimately be a buy opportunity. Charter 35, I keep showing this. This is the unemployment rate. And as you know, the unemployment rate has ticked up to 4.1%. But I just like to keep reiterating this, guys. When you look at this, the unemployment rate on a monthly basis with a 5 and 13 exponential moving averages, the crosses of these moving averages are very reliable, as you can see. I'm generally not a fan of moving average crosses, but on something like this, it works very well. Why does it work well? Because the unemployment rate isn't something like a sports car. It doesn't turn on a dime. It's like, you know, it's like a barge. It's like a big 1,000-foot long ship, and you're turning it. It's really slow to turn, and it will tend to go in a direction for a long period of times. For example, when these moving averages cross, notice the unemployment rate will tend to trend in that direction for years at a time, right? All right. Well, the fact that this is crossed up a couple months ago, I think this is now starting a new uptrend, and this is going to continue for years. So we may eventually see this go to 4 or 5, 6%, 7%. You know, that actually sucks for the next future president, because whether it's a Democrat or it's Trump, they'll be blamed for it. Let's say Trump gets in there. They're going to blame him for a recession, even though really he didn't have anything to do with it. It's already set in motion, okay? So this will eventually produce a recession. This is going to go higher over time. You know, again, you could see when these cross, I think the shortest amount of time frame I see here before a reversal is almost 3 years. So this is going to go on for a while, going to uptrend for a while. Again, it's not affecting the market right now, right? Market doesn't give a shit about it right now. Eventually it will matter. Chart 36, here's the high yield corporate. Again, this follows the market for now, just continues the uptrend, kind of a wedge here. Very shallow or a very flat wedge. So this could always break up out of the wedge. Usually when these wedges are the slope is too flat, a lot of times you'll break up out of them. Chart 37, here's TLT 20-year bonds, kind of still stuck in this range. Remember last week it bounced off the support. Remember, bonds and rates move opposite to one another. Chart 38, here's the 10-year treasury yield. Slight down move today. Again, still in the same pattern we've been showing. And again, longer term, I'm keeping an eye on this weekly chart of the 10-year treasury yield, this big coil forming. The 10-year treasury yield, interest rates are now in a secular bull market. They're never going back to the zero area down here again. Again, guys, they're not doing that until, you know, my kids have their own kids or something. It's going to be a long, long time, all right? But that's not a bad thing. I think having interest rates up at a higher level longer term is actually good. You can get a decent return in, you know, money markets, and little old ladies can get returns, etc. Versus, you know, back when rates were down here and you were getting a 1/10% in your money market account. Now you can get a decent 5% at least. But anyway, we'll see how this coil resolves itself. Moving on to the sectors, chart 40, here's XLK technology. Again, this is where everything's concentrated in. Like I said, Microsoft and NVIDIA make up 40% of this damn thing. We still technically have a little MACD divergence here for now, but again, this is what has been leading the market, guys. These 10 stocks, essentially. Here's the semiconductors. Now, they did make a new high finally. You can see the MACD is diverging. Chart 42, XLF Financials, still stuck in this coil. In fact, if it breaks this coil, that could be a long. Chart 43, transports, they're down this week. Little bounce today, a little black candle doji there inside the pattern around the 200-day moving average. Chart 44, industrials, still stuck in this sideways pattern, little bounce today. Chart 45, XOP, S&P oil and gas exploration. You can see it's still in the channel. Last week it stalled right at the downtrend line of the channel and 50-day moving average. You can see how the 50-day moving average comes in right where the trend line is. So it's very valid. But you can see it's been finding some support initially here around that 200-day moving average. We'll see if that can build or not. And moving on to commodities, chart 46, DBC, that's the index. Still in this large weekly coil pattern. Last week it closed right near the upper trend line of the coil resistance, and we've pulled back off of it. Chart 47, here's crude oil. So first off, supply and demand zones. These are awesome. A lot of stuff out there on TradingView and YouTube. A lot of folks really like these supply and demand zones, and we do too. They're great. They're very powerful and effective. You can see how price bounce has been ping-ponging between supply and demand zones for the last year, and recently the supply zone. Otherwise, here I added a large coil-like pattern. Chart 48, UNG natural gas continues to move down. Maybe it is going to come down to this support zone I showed. Clearly, the 200-day moving average has stopped price since last year. You could see all those 4 attempts that basically stopped price. Chart 49, here's natural gas on the 60-minute. I'm still monitoring this divergence. I like that we have a second divergence here. I didn't draw it in, but you can see here on this low a week ago, you had a MACD divergence. And technically now you have a second low here, almost a double bottom, but you did make a new low there. And you have another MACD divergence. But the MACD is closer to zero. Usually those work out better. So still on watch for a potential bounce here. Chart 50, here's Boyle. That's the leverage diversion. Same thing applies. Chart 51, copper down about 1% this week. Last week it bounced right off that 20-week moving average, as you know. Of course, big rally this year out of that weekly coil was a big move. Chart 52, DBA, agriculture. Again, found support last time in that demand zone. But as I pointed out on Monday, the declining 50 and 20-day moving averages would be resistance, and you can see we're pulling off of that. Now, if we pull back into this demand zone, I wonder if we're going to break it. We've tested it so many times. When you test a demand zone too many times, it weakens. So that's something to be aware of. But I wouldn't mind that breaking because I think down in here would be your better buy near that 200-day moving average. Chart 53, here's DBA on the weekly. Again, I view this as kind of a big ABC. And if you're new to Breakpoint, I pointed out at least, this bullish cup and handle in DBA back in January. So that was a heck of a trade out of that pattern. Chart 54, corn. Corn has been absolutely decimated lately. Continues to move down. We got a doji today. It is getting very oversold here. Chart 55, here's the 2-hour view. So you got a wedge here forming. You got MACD divergence. And again, this could bounce at any time, but again, it's like catching a falling knife. It's unlike the market. It's downtrending. You know, the market is uptrending like crazy. Here's the weekly view of corn. You can see corn has been, unlike the other commodities, it's been downtrending since May of last year, or no, May of 2022. So for 2 years. Now it is approaching a demand zone down in here. We'll see if it can eventually find support there. Chart 57, uranium, big pop today, closed right through that resistance. You can see the volume pickup. Remember, uranium is in a long-term bull market. Here's the monthly view of uranium. I'm still targeting this upper area in the 40s, right? Remember, I liked uranium back in 2020 on that multi-year base break and in 2023 on that little coil. Chart 59, CCJ, uranium, the major uranium stock, had a big breakout today, as you would expect with that move in uranium. Chart 60, here's Bitcoin, which was down today. Still trying to hold this little support area for now. Chart 61, I haven't shown this for a while. This is the weekly chart of Bitcoin. Remember, postulated this is a wave 3 high earlier this year, back in the spring. Well, that ended up being the case. You could see a perfect little ABC pullback, wave 4. Okay. Eventually, once this bottoms, we're looking for a new all-time high in a wave 5. Chart 62, US dollar, down slightly today, still in the daily channel. Chart 63, there's the weekly, still in the coil. Again, eventually this is going to break. It is getting tight. Chart 64, here's the euro. So this is also still in its pattern. We'll eventually know which way these break, guys. They are getting fairly tight. Moving to precious metals, chart 65, here's gold, which was up 0.5% today. But, you know, it's still stuck in this range. Now, if it can break over this range, then I think it has a shot to make a new high. Chart 66, here's gold on the weekly. Like I said, our favored view is, you know, long term, this is in a bull market. This is in a nested 1, 2, 1, 2. This is some sort of wave 4 correction. We're eventually looking for a new high in a wave 5. I think gold's eventually going to go to $3,000, guys. Chart 67, here's silver, slightly down today. And still, you know, remember last week it broke out of that channel. We're on that 50-day moving average. Jabber 68, there's the weekly view of silver. Jabber 69, GDX up 2.6% today. The positive in that market still is that the stocks are leading. You can see it on the GDX GLD ratio trending up. Remember, the stocks tend to lead, and they've been doing that. So maybe this goes to make a new high, and wouldn't be surprised at this point. It's very close to it now. That said, Jabber 70, here's the BPGDM Rinko system. Remember, great mechanical system, very clean buy and sell signals based on these parabolic SARs on the Rinko. This gave a buy signal on March 1st, which was phenomenal. Okay. Now it gave a sell signal there in early June, up around the 90% range. It pulled back, and then it only pulled back to, just below that 80% area, and it went right back on a buy signal. But the one thing I want to point out, guys, is back here when we got a buy signal in March 1st, that was the time to hold the gold stocks, and you had a huge run, right? But this didn't recycle much. So this was down in oversold territory down here in March. This last buy isn't. It's up in the 80%. So what we may see here is this run up. Maybe this goes up into the 90%, and then you form a big MACD divergence. So this next run, I think, is going to be smaller, maybe like a fifth wave move. Let's follow up on some individual mining stocks that I've put out. So here's CDE, silver stock. Remember a week ago, and this coil pattern broke out. Very nice trade. Jabber 72, AG, silver stock. Again, nice bounce off that 200-day moving average. I like the weekly, though. Here's the weekly. Love the weekly. You got a falling wedge, which broke out in the spring. Initially stalled at that first supply zone. You have a perfect ABC pullback. This now looks set up to eventually start another uptrend again here. Notice your moving average ribbon pinching. I think this makes it up to that next supply zone eventually. That would essentially be more than a double just getting up to there. Jabber 74, EXK, boom! Up 16.3% today. Man, what a move. Congrats if you're in this puppy. Nice move. I didn't look to see what the news was. I wonder if it was earnings or if someone wants to buy them out. That's a heck of a move. And guys, we had this as a long, remember, on March 1st. Back here, in the $1.60 range was the trigger. So think about that percentage move. Awesome. Jabber 75, Newmont. Broke out of the coil last week. New high again today. All right, guys. Finally, let's move to other trade ideas. So QURE was a long idea from Steve's newsletter last night. Look at today's pop. All right. Up 51% in one day. When you get a 50% move in a day, guys, I'm locking in my profits. I'm just going to sell it. Because that is a hell of a move in a day. But this was right on the website last night. You could have caught this. Bought it right this morning. Jabber 77, VRTX, also been on the watch list since Monday. It's moved up steadily here. Now, I do believe this is a fifth wave move. So it's probably going to end in some sort of MACD divergence. But it is uptrending. Nice trade. Jabber 78, ASML, another one that we had. It's moving up nicely. Jabber 79, STVN, another one from the weekend. Remember this falling wedge, MACD divergence. I said you could have a stop at the low. So when that break from the wedge, I was looking for a higher low. So to me, that was a great buy with a stop here. And it's now moving up. Now you may want to consider some profits at the 50-day moving average there. Jabber 80, here's Baidu. Chinese type play, one hell of a move out of that falling wedge. Great move. Jabber 81, CrowdStrike. This is one on my watch list. Now this broke down instead. I said this could go either way. I didn't play it short, but it would have been a good short. Jabber 82, Kava, another example. This actually tried to break out here. I bought it and I stopped out. I should have shorted, and you could see it broke down. Actually, it would have given you a great short, right down to the 50-day moving average. Jabber 83, Ford. This continues to play out nicely. Remember, we had it as a long idea back here in this coil. Trail the stops up. Jabber 84, Rivian, also continues to move up nicely. Kind of has an inverse head and shoulder look from the bottom. Jabber 85, MDGL. I've liked this pattern, but you can see so far it's stalled. It broke out of the little coil here, but it's stalled at that trend line. Now we'll see if it can hold this and attempt again. I was hoping this would break out, but we'll see. I still own a little bit of this with a stop. Jabber 86, AMD, hell of a move out of this channel that we've had on our list for a couple weeks. It's now in the first supply zone. That's a resistance area. Jabber 87, Intel, nice move out of this base. Intel's been really depressed, so it was a good contrarian out of this base. Here's a new setup, Chartbird 88, Nike. Nike's been absolutely pummeled. This was earnings. But look at this, guys. This is what I call a CCI Bungie bounce play. Here's where the CCI, you can see it spiked below negative 400, and then it proceeded to move up, divergence, while price moved lower. So that's your setup. Your trigger would be off the doji. So with today's doji, your trigger would be 1 penny above today's highs. So 72.65 would be your trigger. You put an immediate stop at the low. What are your targets? Initially, targets are the 5 EMA and the 9 EMA. You're not looking for a big swing on these. You're looking for a mean reversion bounce, Bungie bounce. So this is on watch right for tomorrow. Chartbird 89, Tesla. Again, up, and away. We had it as a long here in June off that little tight coil, and it's just basically went parabolic. KISS system went long back here. Okay. So it's been riding this whole thing. Again, I continue to state this. It's getting quite extended here. In fact, I think there's a setup occurring on the inverse ETF. So here's the inverse ETF, TSDD. That's the double inverse ETF. Now, with today's tight doji, and this is, to me, this is volume capitulation. Shorts capitulate now. A trigger over today's doji could give you a trade. Maybe up to that 9 EMA, put an immediate stop at the lows. Here's the 60-minute chart. The 60-minute chart supports this. You got a nice tight channel, nice MACD divergence. So breaking this channel, to me, would be a good trigger as well, right over this trend line. I'll be watching that tomorrow morning. Chartbird 92, AMT, been on the list. It's testing that trend line today. This is kind of a bull pennant-like pattern. Chartbird 93, EW, one from Steve's last night, still a valid setup. And just following up on some of these dividend plays, DSL, it's been moving up nicely. Remember, ex-dividend date is July 17th, so that should be next week. This pays monthly, and it pays about a 10.5% annual dividend. Chartbird 95, OXLC, this one pays a 19% annual dividend, so very high. This one is ex-dividend on 7/17. Again, I bought this, 2 weeks ago, so I'm sitting nice just with price, and then I'll eventually get that dividend. And I've been showing you this, guys, too, so you could have bought this early on. And AMZA, another one. This one pays a 13% dividend. Also pays monthly. The final stock, and guys, this got out of order. I apologize. This meant to be up with the mining stocks. This is pause. It's a silver stock. Weekly pattern. It's up 5.4% this week. Right into this demand supply zone again. Remember last time it stalled there. Beautiful move out of this falling wedge back in the spring. If we can clear this area, I think this has a shot to make it to its next supply zone up here in the upper 20s. All right, guys, that does it. Quite a long newsletter for a Wednesday, 43 minutes. But again, appreciate all your support. If you're on YouTube, please consider subscribing to us. That really helps us out. Again, our 6-month subscription is our best. And if you need some help, you can always write in, and I can give you a private Zoom call or whatever to help get you started. All right, guys, have a wonderful evening. Take care.